The mortgage forbearance is ending, and you may be wondering, what are these 5 million homeowners going to do? Are we going to see a tidal wave of foreclosures? Well, it's not quite the 5 million the mainstream media continues to mention. You know, they put out more twists than a pretzel factory. Those were May 2020's numbers. As you can see here, we're about half that now, as people have already left the program, and they left unscathed. But 2.5 million are left, and that's still a lot, right? Agreed. So what's going to happen to them when the mortgage forbearance program expires? Where will you be able to find all of these foreclosures for sale? Well, I've seen the data, and I'm going to share it with you so you know where to buy. Let's go. Hi, my name is Matt Theriault, CEO of Epic Real Estate, where we show people how to invest in real estate so they can escape the daily grind and retire early. And a big part of making this plan work is by finding discounted real estate. And everyone knows that foreclosures are typically sold at a discount. And everyone knows that there are a bunch of homeowners out there right now that haven't been making their mortgage payments. And as sad as this is for homeowners, and tragically by no fault of their own, there is the potential a good number of these homes could go to foreclosure. The bank will take them back and put them on the market. And someone is going to buy them. And I'm thinking, why not you? Since the Coronavirus Aid, Relief, and Economic Security Act passed last year, more than 9 million Americans hit pause on making monthly mortgage payments, entering what's technically referred to as a forbearance. In June this year, a second extension was announced, giving homeowners who have yet to enter the forbearance program a chance to do so. And when looking at the maximum forbearance periods allowed, we're still not looking at any homeowners technically being forced out of their forbearance program and potentially losing their homes until really the end of the year. The exact date remains to be seen, as the Federal Housing Administration can't kick this can down the road forever. The chickens will come home to roost, and when they do, then what can we expect? Although we could see a real estate bubble pop at some point, this is not 2008, and here's what I mean. First, borrowers are in the best financial shape they've ever been. Here, look at this. The average credit score for repeat home buyers is around 740, and when we're talking first-time home buyers, that score barely moves, approximately a 725 FICO. Second, the average back-end debt-to-income ratio is falling like Nate Robinson in a Jake Paul fight. For both repeat buyers and first-time home buyers alike. And third, and what's probably the most important metric when it comes to looking at people's ability to make their mortgage payments, is this chart here. The mortgage debt service payments as a percentage of disposable income ratio. It hasn't been this low like ever, and it can't go much lower. So today's homeowner has got strong credit and low debt, and they're all paying their bills. Okay, sure, but there's still got to be some foreclosures coming, right? Well, let's take a look. The majority of homeowners in the program, according to the Mortgage Bankers Association, 77.1% of them have exited forbearance with a loss mitigation or modification plan in place. Loan deferrals or partial claims add up to 27.6%. Continuation of monthly mortgage payments make up 24%. Reinstatements 15.3%. And loan modifications 10.2%. From September 2020 through June 13th of 2021, only about 1 in 10 homeowners opted to exit forbearance by selling their home. That accounts for 7.5%. And then losing their home by a deed in lieu or short sale represents just 2%, totaling an estimated 250,000 homes. So no foreclosures coming out of these groups. But here's where you've got a shot. 15.3% of homeowners exited the forbearance period without a workout plan, totaling about 400,000 homes. And with these, considering there is no data on whether these homeowners can affordably pay the mortgage or not, or whether they will likely end up in foreclosure and on the market, we could see potentially 3 different scenarios play out here. If all 400,000 of these homes were to go into foreclosure and get listed, that would add up to about 24 days of supply to the current housing market. That's it. If 2/3 of these homes end up on the market, that's about 268,000 homes, which will add just about 17 days of supply. If only 1/3 of these homes end up on the market, That's approximately 133,200 homes, making up a paltry 8 days of additional housing supply. So given that only 1 in 10 borrowers are opting to list their homes, the more likely scenario is that 1/3, or even less, could end up as listed homes. Hardly a tidal wave of foreclosures. Now, if you're still having doubts about the number of foreclosures to hit the market and when the real estate bubble will burst, look at this. Home equity in the last year surged to $23 trillion as the value of the housing stock topped $33 trillion. It's very unlikely, even for the homeowners in the most dire straits, are going to just sit around and wait for the bank to come take their home. No, they'll put it on the market, they'll sell for top dollar, likely in just a few days, and use some of that equity to make up missed payments and then pocket the rest. Even for the very worst cases, there's enough equity to satisfy their delinquent loan obligations and walk away with some profit too. So if you're waiting for the flood of foreclosures to buy your next piece of property, you could be waiting for a long time. And in the immortal words of Mark Twain, words that have stood the test of time, don't wait to buy real estate and wait. Every single person that has ever listened to and heeded this advice is better off today than if they ignored it. Listen, I know it's competitive out there, but it's worth the fight. Real estate works. You got this. EpicBreakthrough.com is the creative financing breakthrough real estate investors are looking for. Get started with a list of 21 creative financing terms and deal structure templates to invest in real estate using more of your mind and less of your money. Epic is changing the game. Start now for free at EpicBreakthrough.com. So what surprised you the most and why? Let me know below. And who else do you know that needs to see this? When their name comes to mind, please share it with them. Oh, and if you're already subscribed, I pulled this video out special for you to watch next. Otherwise, I'll see you next time. Thanks for watching. Take care.